Hi, and welcome to this video. This is Forex Trading for Beginners series, and this video is the first video, which is lesson one, and we'll be introducing you to what Forex is all about. A lot of you have been hearing Forex trading here and here from almost every media, but you don't know what exactly this Forex trading means. This is the right video for you. This video is going to be in series of three videos, lesson one to three, and this is the first of it. And today and in this video we'll be talking about Forex trading. Okay, what is Forex trading? And once we are done with that, we'll talk about the terminologies that is used in Forex trading. This lesson is sponsored by the XB Academy, and my name is Michael. You can call me at the XB. I'll be your tutor through these lessons. Okay. All right. Before we proceed, I would like you to pause the screen and read this disclaimer. Very important. Just pause and read and understand it. Okay. All right. Let's proceed. Now, what is Forex? That's the first question. When you hear the word Forex, what comes to your mind? Now, Forex simply means foreign exchange. Okay, foreign exchange. I put currency here so that you will know that it is foreign currency. Okay, that's like foreign currency exchange. Okay. Now, why Forex trading means exchanging one currency to another for trading and profit making purposes. It's as straightforward as that. The FOR in the word Forex stand for foreign, and the REX, sorry, FOR stand for foreign, and EX stand for exchange. That's where we'll have the word Forex, okay? And what is being exchanged is foreign currency. For example, you have United States dollars, USD, and you want to change it to euro. You want to change it to euro, okay? So that is what Forex is all about. It's just exchanging of foreign currency. Why Forex trading means when you do it for profit purpose. How do you do it for profit purpose? Let's say um let's say you have a bill of $100, and you know that okay, this money is going to worth more in euro later in the future. Okay, you feel like this is just $100, right? $100 bill, and you exchange it to euro. So you are holding the equivalent of $100 in euro at that time being. Then later in the future, let's say US dollar lose some strength and euro appreciates, you can exchange it back. Okay, I will use Nigerian currency NGN to illustrate it further. Let's say you add somewhat 2, 3, let's say 5 years ago, or okay, 8 years ago, that's 2014. Okay, 8 years ago, one US dollar is equivalent to around four around 400, I think, yes, around 400 naira. One US dollar is around 400 naira, but today one US dollar is now around 800 naira. That's almost two times. So anybody that is having US dollar that he bought in 2014, he bought it in 2014, is going to be buying $100 bill with, let's say, 40,000 naira. Okay, 40,000 Nigerian naira. And today is going to be is going to be changing. Is going to be exchanging that same $100 bill he bought for $400 8 years ago. Today is going to be trading it. It's going to be exchanging it at $100 to 80,000 naira. He has made profits. All he did was just bought US dollar and kept. Okay, so that's how it works. This thing works because this currency of countries don't have a static value. They appreciate, they depreciate compared to other currencies based on the economy of the country that is that is that is that uses them. Okay, based on the economy, based on the occurrences and all. There are a lot of things that can cause currency to depreciate and to appreciate. Okay, so we are not going into that for now. Now, to trade forex, you must register with a broker. Now, we are not interested in that kind of buying uh, currency bill, currency notes, and keeping and selling later. That's not what we want to be doing. Okay. Now, we'll be trading through a body, a third party called broker. Okay. So you have to register with one. You need a broker for you to be able to trade. Now we have a lot of these brokers. One of them is exness, and I'll be dropping the link to this broker's website or the group's description. So if you are totally new to forex, you can just click on that link and register for the broker. Okay, just do that and wait. Come back to the video. You can pause the video and do that, then come back to the video. Okay, you understand what to proceed. Now, brokers. The work of this broker is to grant you access. Is to grant you access. Is to grant you access to the financial market. Okay, or let me just say the forex market. So it grants you access to the global forex markets, where you can actually trade these currencies without having to leave your country. One, you don't have to go to any bank, and you don't have to exchange any money. All will be done through the broker and a third party app that will be talking about shortly. There's another app where you trade in reality, but on your broker, that's where you deposit your money. Okay, and the broker will give you access to the global market. Now, for you to trade the market, you need to download an app called MetaTrader. It's not all brokers that mandates you to download MetaTrader. Some brokers have their own trading platform within their website. Okay, but most of them will just link you with MetaTrader application. That's where you'll be doing your trading of currency. I think this is clear. All right, let's proceed. Now, there are a lot of brokers company out there, but personally I use exness broker. I already said that. This is how to spell it. The exness. I will drop the link on the group on the description. Now, they are very good in my opinion. I will drop a link to their websites, the description of this video. Click and start with exness broker before you proceed with this video. Once you are done, download MetaTrader 5 or 4, anyone you want. Or 5 is the latest, so that's what I use. Because that some broker don't allow 5, some just allow 4. But for now, let's just stick to 5. Since you are using exness broker, exness allows MetaTrader 5. So you download MetaTrader 5 app on your app store. If you are using Apple iPhone, you go to Apple App Store and download it from there. If you are using Android, you go to Google Play Store and download it from there. Now, this is the app that we'll be using that will be doing all trading activities on. So all you do on your broker website is just to deposit your money and withdraw. All the trading activities will be done on the broker. I believe we are following. We only make deposits and withdrawals on brokers' websites. This is clear. So I will be showing you how to open demo account MetaTrader now, and I'll be showing you all you need to know about MetaTrader. So let's go. Since we will not be having much business to do on our broker's website, which is the exness, we will not be talking much about that, but all our trading activities will be done on MetaTrader. So let's go to MetaTrader now and see what it looks like. I'll open a demo account now. MetaTrader allows you to open they give you free money. You don't have to deposit. They give you like a free money that you can trade with to test and learn how the trading works. We call it demo account. So the money they give you is demo money. You cannot withdraw it. You cannot use it for anything. It's just for you to test. Okay. So we're opening a demo account that will have the demo money to see how this whole thing works. Let's go. All right. So this is MetaTrader 5 on PC. You have to do is just go to Chrome browser and search for MetaTrader. Just search download MetaTrader. It's going to download it for you. And once you download it, you can open a demo account. You can see I already open one here. I already open one here. All you have to do is just come to file, okay, then come to open an account. This is MetaTrader, MetaQuotes broker. Okay, that's what we'll be using for the demo. Don't mix it up. When we want to start trading real, we'll be using the exness. But for demo, we'll be using what MetaQuotes. This is it here. So just click on it and go to next. So go to open demo accounts. Then you fill all this, okay? Just fill anything inside, it doesn't really matter. Confirm, agree with this, then next. Okay, it's very, very easy. But I won't be doing it again since I already did it. And I have a $10,000 demo account, okay? Then you go to, this is the interface. All right, so as I was saying, this is the interface for Android device. An Android tablet. If you are using Android tablet, this is what you are going to see. But if you are using Android phone, you are going to see something similar to this, but not exactly this. Okay. I will also show you how it looks like on Android phone. Okay. So once you understand it, you can. When you see it on Apple devices, it is almost the same thing. Okay. But there's great difference between PC and mobile in general. Okay. That's why I'm doing it for Android device separately. Okay, so you uh, you come to this point to open your demo account. Just come here. Then once you get a, you tap on this small guy here, and you can just say add an account, and you can add that code. Then can you see it? You just come to open a demo account here, and you are here. You can just open the account, and that's all. Okay, that's easy as that. Now we're doing it from Android phone, not tablets now, because there's a little bit of differences. But I'll be using this one, this for in the course of the class, all the examples and everything's I'll be using this. But once you get it from here, you can easily get it on any device, right? Let's go.
All right, this is the Android phone interface. These icons here that you are seeing here on the tablet, they are around here. Okay, that's one of the major difference, but the icons are the same thing. You see that they look almost alike compared to what you saw earlier, and they have the same function. So to open demo account, you can just tap on this guy here, just tap on here, then tap on manage account. If you see manage account, then tap on this plus here, right? Once you see that plus, tap on meta codes, then tap on open demo account, fill all this and tap register. Just tap this one and tap register. I won't be tapping it because I've done that before. Do you understand now? Okay, so that's how to do it. If you are using another broker, let's say you are using exness, you can search for exness. It's going to bring it out, then you can tap on it, and exness would have given you your login, then you can use it to log in into this MetaTrader. That's how to do it. So this way you come to see your history. These are the trades you have already placed. It's showing 000 because you have not placed any trades. Then you will see the trades that are running here. Then you see the charts where you can do your analysis. We'll talk about that later. Then you see your codes where you see all the currency pair. We'll talk about currency pair later. For now, let's go back to our slide and continue.
What are forex technologies? Now, forex technologies are terms used in forex trading. Just as other professions have terms that are peculiar to their profession, so is forex. When you hear two doctors conversing, you may not understand what they are saying because they'll be using terms that is peculiar to their profession. Same as you hear two baristas conversing, you will not really hear what they are saying. That's how it is. The forex industry is full of unusual terms, acronyms, and words that we can often be left in a little bit of experience when you go. Yeah, there are a lot of them that you will not really understand, okay, if you don't trade. Now there are a lot of such terms, and we'll be going through the most used ones in this module. Okay. All right, so let's go into it. And these are the terms we'll be looking into. And most of these terms are on the MetaTrader 5 because I told you that I'll be dealing with MetaTrader 5. Okay, so most of them are on MetaTrader 5. So as we are talking about we'll be going to MetaTrader 5 to see it in reality. Okay, that's what we're doing. All right, now we have them like this. This the ones I have here. Currency pair, I have currency pair, I have leverage, equity, bid and ask price, volatility, going long and short, margin, peak, lot size, bullish and bearish, slippage, broker. All right, let's take this one after it. Now, what are currency pairs? We established earlier that forex means exchange of foreign currency. Okay, and that means that for exchange to happen, there must be two currencies involved. If you want to buy US dollar, you have if you want to change a particular currency to US dollar, you need the currency to change to other currency. That's just it. It's just straightforward. You cannot you cannot perform exchange between with only one currency. It doesn't work that way. Okay, so you are changing dollar to euro, you are changing Canadian dollar to Australia dollar, you are changing Nigerian naira to Ghana cities, whatever things, what these two currency pair you are exchanging at what forms currency pair. Okay, let's say we are trading to exchange euro to USD, we can pair them, we can pair them together as a currency pair and represent it with this acronym EURUSD to show that we are trading euro and USD. Maybe I'm having euro, I want to change it to USD, or I'm having USD, I want to change to euro. But this is the pair we are trading. Okay. Now, this pair can be traded. This is what you will see on your MetaTrader. Let me show you the currency pair of MetaTrader. Now, here, all right, these are the currency pair. This is MetaTrader 5 or PC. And if you come here, it's always there. You see the currency pairs. We have euro USD here. That's euro changing against USD. We have GBP and USD. We have USD and CHF. And we have a lot of them like that. And if you come to Android device version, you also see there. Here is the Android device version, and you can just tap on this code here. If you tap on this code here, you are going to be seeing currency pair here, the USD, Euro. That's it. You can add by tapping on plus. On your phone, you see it below, just somewhere below the screen if you are using an Android phone. Okay, so that's how it works. So let's go back to the slide and continue our lesson. Okay, so let's proceed. Now the next one. All right, we are still on jewelry currency pair. Now this pair can be traded when you have jewelry. It means you are when you buy jewelry. Okay, is this currency pair? Sorry, excuse me. Now, is this currency pairs that you're actually trading? This currency pairs that you're actually trading, and when you hear the word trading, simply means I say there are no two words, there are no two ways around that. Okay, so you'll be buying, selling the currency pairs. Okay, that's what you'll be doing. That's exactly what trading is all about. And when you buy Euro USD, what you are saying is that Euro will outpower USD, and this pair will start increasing in price, because normally under quotes you will see something like Euro USD is equals to 0 point something. Okay, in quotes, that's where we were before. Let me take you back there. That is here. You see Euro USD, and you see these numbers close to each other in the front. Okay, 1.0765. Let's just take this first one. I'll explain to you how we have to later. Okay, just work with this one. So you have Euro USD equals to 1.0765. What this means is that 1 unit of Euro USD is equals to 1 unit of Euro is equals to 1.0765 US dollar. In other words, this is telling you that 1 euro is equals to $1.0766. This one here is telling you that 1 GBP is equals to 1.22066 USD. 1 USD is equals to 0.9218 CHF, and so on and so forth. Okay, let's go back to our slide. Okay, before I go back to our slide now, I told you this is what we'll be buying and selling. Now, if you are buying Euro USD, simply what you are saying is that this number will keep increasing. That means Euro will keep increasing against dollar. Okay, Euro will keep increasing. The value of 1 euro to dollar will keep increasing. Okay, that's exactly what you are saying if you are buying the currency pair. And if you do that and the price eventually keeps going up, your profit keeps increasing. That's what it just means. You keep making more profit. But if it doesn't go that way, then you will not be making profit. All right. And the next thing is, if you are selling Euro USD, what you are saying is that 1 euro will start increasing in value compared to dollar. It will start decreasing. So that means this number will start going down. This is 1.0766. So if you go to 1.07656463, so if you keep going down, that's exactly what you're trying to do if you are selling. And if it's going that way, it's going down, you'll be making profits. But if it begins to go in the other direction, you are selling and the price is increasing instead of decreasing, then you are making loss. This is what trading is all about. And we all know that when we mention the word trading, profit and loss are part of the game. Okay, so let's proceed back to our slide. Let's go back to our slide. Now, the pair can be traded. When you buy Euro USD, simply means you are saying the pair will go up. That's the value of Euro will go up against US dollar. And when you sell, you are saying the exactly direct opposite. I think I explained that. Now, currency pairs are categorized into 3 core groups. We have major currency pairs. These are currency pairs that involve the major currency and the US dollar. Examples of such pairs are Euro USD, USD CAD, GBP USD. There are a lot of them, but these are the major ones. Okay, these are major currency pairs. And we have minor currency pairs. This one doesn't include USD. Okay, they are currency pair of developed country that is not USD. That's not United States. Okay, they are not traded against United States, and we have a lot of minor currency. Now, why trading is recommended that you trade from major currency, especially Euro USD, GBP USD. These are the currency pairs that have high volume, and because of that, they have low spread and more volatility. We will talk more about these things. Now, now the third one that I won't advise you to trade at all is the exotic pair. These are quite literally exotic currencies, lesser well-known developing countries, which can be extremely volatile. So if you are trading lesser well-known developing country, e.g., this is South Africa rand, this is Mexican pixel, I think. Is it pixel? I'm not really very sure. But that's Mexican currency. These are countries that uh, are not really very popular. Now, the next thing we should talk about here is base currency and put currency. Okay. Now, these two currencies that you have in the currency pair have their names. We have base currency. Base currency is the currency that comes first in the currency pair. So if you have GBP USD, GBP is base currency. And quote or counter currency, let's just call it quote currency, is the second currency quoted in a currency pair. So if you have GBP USD, the USD is the quote currency. Just take note of that. Next one we'll talk about is leverage. Now, simply put, leverage is the act of borrowing more money from a broker. So this involves your broker. You'll be doing this while registering for your broker, while registering for on your broker's website, or while opening a live account. That's where you do it. You select the leverage you would like to use. So how does this leverage affect your account? Okay, let's continue. Your it's act of borrowing more money from your broker to be able to trade larger position compared to your capital. You can leverage up to 100, 500, 1000, etc. depending on your broker's preferences and flexibility. 1 to 100 means you are trading with the amount that is 10 times trader, 10 times bigger, okay, 10 times of your capital. This means if you have $100, you can trade with 100 times 400, which is equal to 10,000. Let me explain this. If you are using 1 to 100 leverage, that means even though if you're having $10 in your wallet, in your account, that $10 can act as 10 times 100. So it can act in the market as $1,000. If not because of leverage, most people may not be able to trade because it's so expensive to trade. I'm not going to lie to you, but because of leverage, it makes it easier for you to trade with your little capital, with your little money, as little as $10. $10 with 100x is going to be acting as $1,000 in the market. Just like I have money to buy just only one truck of let's say red oil, one one truck of red oil, but the company that produces red oil allow me to buy 10 truck, but I'll pay for only one. So when I sell, I'll come and pay the remaining excess of nine that I borrowed. So I'll have my profits and they will have their own money also. Do you understand? That's how it works. So you can leverage up to 1,000. Some broker even allow you to leverage to 1 to 5,000. The problem of leverage is just that as it maximize your profit, also maximize your loss. We'll talk about that later in the advanced course. Now, the profit you make by trading will be added to your account balance, or if you if there are losses, they will be deducted. Leverage increases your buying power and also multiply your gains and losses. Leverage is double-edged sword. We'll talk about more about leverage more when we get to that class. It is just beginners class. Okay. All right. The next one is equity. You can see this equity on your MetaTrader. Okay. Now, equity is the total amount of money in your trading account, while your profits, including your profits and loss. For instance, if you deposit $1,000 into your account and you also make a profit of 300, your equity amount is $13. This means you still have the trade. opened. You have $10,000 capital and you open a trade. The trade is running, okay? Don't forget, the trade is running and you are running on a profit of $3,000. Now, your balance is still $10,000 because you have a trade running, you have not closed it, but it will now, equity will now be $10,000 as your capital plus $3,000 as your trade profits while the trade is still running. Okay, the trade is still on. You have not closed it. Now your equity amount is going to be 13,000, and I'm going to be showing you uh this now. Let me just show it to you. Okay, now if you come to uh if you come to trade here, you see you have balance 10,000, you have equity 10,365. That's because there's a trade running and it's on $270 profit. Okay, so that profit now is added to the balance to give us the equity. That's what equity is. Okay, so that's clear. Let's proceed. The next one is bid and ask price. Now, the bid price is the price a trader is willing to sell a currency pair. The ask price is the price a trader is willing to buy a currency pair. Okay, and if you go to your MetaTrader, you will see them. Let's look at it. You go back to currency pair. That is why we have two price in front of each currency. Can you see? That's why we have two what? Two price. This the first one, the currency at which the buyer is interested in buying, and this is the currency the seller is interested in what is selling. So that's why we have the two. Okay, that's how we have bid and ask price. It's very, very glaring. Okay, these are knowledge you just need to have. It doesn't really affect your trading that much, but knowing them is okay. Now we have volatility. Volatility simply means change in price of a currency pair or any financial instrument. And an instrument that usually have high change in price rapidly is said to be highly volatile. Example of a volatile asset is what is Bitcoin. It's very highly volatile. So volatility is just the change in price, the price of the currency pair or any financial instruments. Financial instruments, anything you can trade in the financial market, be it cryptocurrency, bonds, stock, and so on and so forth. So when the price changes, then that's volatility. So when the price changes too often, we say it's highly volatile. Okay, so let's proceed. The next one is going long and short. When you go long, you buy. When you go short, you sell. That's just it. Going long means buying. When you buy a currency pair, you are going long on that currency pair. When you short a currency pair, you are going short on that currency pair. Okay, let's proceed. And the next one is margin. Margin is the capital required to open a position. Margin determines amount of position size a trade can open at a time. A trader can open at a time. Sorry. So this simply is the amount you need, the least amount you need before you can open a trade. Or I can call it the amount of money you have to keep it running. Okay. Okay, so this is where you will see that for your MetaTrader. This is where you see that MetaTrader. You see that here it is margin. So for me to open trade on this account, I need at least $214. Okay, to keep this trade running, this trade that I'm having here, to keep it running, I need $214. Okay, I must have anytime my balance go below $214, it's going to trade here. It's going to close the trade for me. That's just what it means. So that money is what I need to have to keep the trade running. Okay. That's margin. So when you have a margin call, there's something called margin call. When you have a margin call, that means you are being called that you are going out of margin, and you should add more money to your account, or else your trade will be closed. Now the next one is PEEP. The next one is what is PEEP. A PEEP stands for percentage in profits, and is the smallest price movement any exchange rate can make. It measures the amount of change in exchange rate for a currency pair in the forex market. A PEEP is the fourth and final number after the decimal points, with the exception of Japanese yen-based currency pair, which are displayed to two decimal points. I will explain all of this. PIPs are the means by which market profits and losses are being quantified. Now let me show you what PIPs is. Let's go back to MetaTrader. Okay, here is the price for each currency pair. And for Euro USD, for example, for Euro USD, we have 1.07683. Now this is the P, this last number here, that's where you start calculating the pips. So this, when this move up by one, changing this to 70, we'll see this as increased by 1 pip. Okay, and it just decreased now, so it has decreased by 1 pip. Okay, so that's pip. If we decrease again, we have pip. So it's normally 4 degrees like this. That's pip for almost all the pairs. But we have pairs that are connected with JPY. They normally have their own like this. This is the pip. When this change from 7 to 8, that's increased by 1 pip. When it reduced from 7 to 6, then it just reduced by 1 pip. The price just changed by 1 pip. So that's what pips is. It's just the lowest movement the price can make, and that's where you quantify the loss or profit you make on each trade. When you are buying, a price move. Excuse me, let me get water. Just so that's all what it's all about. So when price move 1 pip in your profit, the more pips it makes in your favor, the more profit you make. The more pips it makes in your disfavor, the more loss you make. That's just how it is. Let's proceed. So the next thing we'll talk about is lot size. Okay. What is lot size? Now, a lot in forex trading is a unit of measurement that standardizes trade size. It standardizes trade size. It is the amount you are taking on a trade. So, in a nutshell, before I proceed, lot is just what determines how much you make when price move 1 pip against you, or how much you lose. Okay, so if price should make 10 pips against you or in your favor, or let's say 10 pips in your favor, how much profit are you going to make? That's going to be determined by the lot size. How much loss are you going to make if you take 10 pips in your disfavor? That's going to be determined by lot size. It is the amount you are taking on a trade. When we open a trade, lot size determines the magnitude of our losses or wins. Since the change in the value of one currency compared to another is measured in pips, which are the fourth decimal place and therefore very tiny measures. This means trading a single unit isn't viable. So lots exist to enable people to trade this small movement, large batches. Do you understand? The way pip is very, very small change in price. Okay, just imagine you're buying $1 and it's moving in, you move 0.00001 in your favor. So how much is 0.0001? That's very, very small. Okay. So now lot size can actually make you maximize that 0.0001, which is 1p. Okay. So you understand it better as you proceed. We have three major types of lot size. We have standard lot size, we have mini lot size, and we have micro lot size. Let's see what these lot sizes are. What's the standard lot size in Forex? A standard lot size in Forex equals to 10,000 currency units. It is the standard unit size for traders, whether they are independent or institutional. Standard lot size are represented by whole numbers, e.g., 1.0, 2.0, 8, etc. Let's look at it fastly. Okay, let me take it together. What is mini lot size? Mini lot size is 1/10 the size of the standard lot. That means a mini lot is worth 10,000 currency units. The size of the mini lot means the profit and loss is lower than the standard lot. So somebody that is using one standard lot, if price should, and someone is using one standard lot, another person is using one mini lot. If price should move 1 pips, both of them are in the same trade, and one price to move 1 pip their favor. This person is going to make 10 times profit of what this mini lot size person is going to be making. This person that opened one standard lot is making $10,000. The person that opened 0.1 lot will be making $1,000. That's just what it is. And we have the third one, which is still lesser than mini lots, and it's called micro lot. So somebody who opened one micro lot will be making $100. Do you understand? You don't really have to stress yourself much about all these formalities. You don't really need them. What you need is just this guys, just know how they represent it. Okay, and I'll tell you one more thing you need to know. Let's see on this next slide. Now, how do you choose a lot size in Forex? To choose lot size, think about the risk you want to take. The greater the lot size, the more money you make, the more money you need to put down or leverage you need to use. Okay, and the greater each big move will be magnified. A big movement is worth the following monetary amount for each lot size, assuming you are trading zero USD. So you have to be very, very, very conversant with this. This is the most important part of this PIP stuff. Now, one standard lot is equals to $10 per PIP. If you are trading and you open one lot on any currency pair, when price move by 1 PIP in your favor, you'll be making $1. So every 1 PIP price move, you are making $10. Okay, every 1 P price moves in your favor, you are making $10. And on the converse, or on the flip side of it, every 1 P price make against you, price move against you, you are losing $10. That's how it is. I hope that is clear. Now for many lots, every 1 P price move in your favor for many lots, you are making $1. Every 1P price makes 1 P movement price makes in your disfavor, you are losing $1. Now for micro lot size, it's what 0.1. You see that the difference is in division of 10. The difference between standard lots and the mini lots is division of 10. Just divide by 10 and you get the next one. All right, let's see this stuff on, let's see it. MetaTrader. This is meta trader for 100. Okay. All right. You see it right here when you want to place a trade. Let me see. I'm not showing you how to place a trade, but let's just attempt to place a trade so that you see it. There are different ways to place a trade. You can tap on this guy. This guy will be on your chart. If you go to the charts, you see it right here. On your phone, you'll be seeing the screenshot is displaying now. You see it just below the screen. Okay. But for this way it show, you can click on this, or you can decide to come to quotes. Just tap on this guy to come to quotes. Okay, once you're on the quotes, just tap on the pair you want to trade. It's just so slow, it's nice. Okay, this is exactly what I want to see. All right, once you tap on it, it's going to bring these options out. Just tap on new product. So you tap on new product, this way you place a trade. You see 1.00. Okay, now this is lot size. Now if I press buy, you see the trade will start running, and every peep, right, every peep, every time price increase by 1 peep, I'll be making $10. As increase by 1 peep, I'll be making $10. If increase by 10 peeps, I will make $100. If increase by 1,000 peeps, I will make $10,000. So I can reduce it by tapping on this. Okay, can you see it? Okay. So this is 0.1. This is not a mini lot. So if I should buy on this mini lot, every 1p price move in my favor, I'll be making $1. Okay? And I can decide to still further reduce it by typing on this. Tap this, just tap on this and just type whatever I want in it. Okay, so if I type 0.1, if I just click on it, it's going to place the trade for me. And you see that is trade here. This is the trade. This is a trade here. You see it 0.06 loss. Okay. So every time price move, my profits will be moving. Okay. I can also open, let's say I open this. Okay, let's use this button this time. I decide to use this button. It's going to bring it. And tap on this to change to another pair. I choose GBP USD now and buy. Or let me choose sell. I want to change to I want to change this to one lot size. So this one lot size, I can decide to sell. If time price moves in my favor, I'll be making $10 per pip. If it's moving against me, I'll be losing $10 per pip. So this is all you need to know about pip. So when you want to place a trade, you have to know how many pips you are risking in that trade. So if you are risking, maybe you want to risk just 10 pips. If you want to risk just 10 pips, what loss size are you going to now put on that 10 pips so that it will not give you the loss that your account cannot pay? We'll be talking more about that later on. Okay. So that's how to choose lot size. We'll talk about this later. But for now, let's just proceed. All right, the next one we'll talk about is bullish and bearish. Bullish means when price is going up, just like long. When price is going up, we say price is bullish, and bearish means when price is going down, we say this is what is bearish. And the last one here is slippage. First slippage occurs when a market order is executed or a stop loss closes the position at T. You will not really understand this because you have not spoken about market orders. You don't even know what market order is. So I'll just skip this for now. I'll put it in the next lesson. All right, and that will be all for today for this particular series. Sorry, particular lesson. If you have questions, you can go ahead and drop them in the comment section, or I'll drop my WhatsApp number on the description as well. You can just message me and ask a question. Thank you very much for watching this video. I hope you enjoy it. See you on the next class.